Oh, sorry. Sorry. Okay. Uh, Hello, everyone. I hope my voice is clear now. Okay, someone please fine. So today we are discussing about financial. So I am C Ankita Bothra. I hope you listen me earlier as well. But today we are come with a new interesting topic: income tax return. The tax season is already begin. So we are here to come with a income tax return for the practical as well as theoretical perspective. What are the important thing and what are things we have to be see when we start filing our return. So we are discussing all things in today with detail. So let's begin with the theory part first. What are the things which we have to be see when we are start filing return? Why return requirement for the everyone? Any query? In meanwhile, the session we will start from the theory first. So we will move for the practical part as well. And if and once we will start this, and you have any query related to the same, then we will you can put in the chat box. Okay. So we'll start from the theory part. So here we are covering these all things today. I hope my screen is visible. Can someone please confirm? Fine. So I hope everyone is ready. Everyone is uh, any query, any concern related to the language part. Also, you can put in the chat box. So we will whatever the thing required on our end, we will definitely help you out. Okay. I think there is some technical glitch. It's not happening. Why? Let me check once. So what are the taxes? Taxes are mandatory financial charges imposed by government, individual, business, financials to fund public services, infrastructure, roads, education, healthcare. So why government take taxes from R? It is always R in mind. But if government not take taxes from us, then how they develop our infrastructure? I know it's very basic, but this question comes in our mind every day. Why tax requirement? So this is the first and foremost thing for the direct taxation system, that how infrastructure of our our country develop. That's why the tax requirement is mandatory. And what type of taxes they collect? They collect direct taxes, they collect the indirect taxes. Direct taxes, like direct taxes based on the income of particular person. So what type of income they have, accordingly direct tax will be taken. And indirect tax, we all know that gst is a commodity based tax. This is not based on the person base. So indirect tax, they are collected in a different product. Different gst rate will be levy, or different type of indirect tax will be levy. So this is the way the tax system will be work in our country. And there is the new concept which is emerged from 1st April 2026. But today we are discussing about financial year 25-26, and the particular that financial year we are calling previous year and assessment year. Now we can use the new term tax year, and which is applicable from 1st April 2026. So the first tax year is a 1st April 2026 to 31st March 2027. So these are things which we are going to cover today, and we are understanding that now onwards from this financial year, 1st April 2026, this is the first tax year. But for the last year, where we use the term previous year and assessment year, I hope you all know that this is the big changes related to the particular tax year, previous year and assessment year. And we are discussing so many times if you attending my session earlier as well. But this is the important thing, that's why we will highlight once again. And financial year, we all know that we follow financial year 1st April to 31st March. Okay. And there's a five head of income in our income tax based, and that each head has a different calculation, and based on the calculation, tax will be levy. So this is the way the entire system will work. So first head is the income from salary which includes basic salary, any kind of salary received by employee because of the employee relationship will be covered in income from salary head. Basic salary, bonus, DA, commission, HRA, whatever they receive from their salary, from their employer, where the employer-employee relationship were there, then that is covered in a salary. And there is a different and specific provision in salary head. We will just overview each and entire thing. Then we will going to the our next part, because this is the once our base is clear, then we are able to deliver the final output good. That's why just creating to base, we will covering these things. So this is the salary head. The second as a house property head. This is a big change specifically related to this particular financial year 25-26. Earlier, the person has a only one house property. They can opt for ITR 1 and ITR 4. But now from this financial year 25-26, the person who has a house property and two house property, they can opt ITR 1 and ITR 4 as well. But more than two property, they cannot able to file ITR 1 and ITR 4. They definitely switch to ITR 2 and ITR 3. I hope you understand this. This is the big change related to the house property here. That's why I'm just discussing with you. We will discuss this later on as well. But for the basic understanding perspective, I'm just telling you about the same thing. And the next thing we have to be see house property. It doesn't mean residential house. Any kind of house property, whether it is shop, factory, anything which will be considered as a house property. So if person has a any factory, any shop, any residential house, any other house, so if they have a more than two house, so third house will be automatically considered as a let out property. And there is a specific standard deduction in house property head, 30% standard deduction. Whatever they receive rent, straightforward 30% deduction will be given, and the remaining 70% will be considered as an income from a house property head, and other municipal tax will be also deducted. So there is a different calculation for each head of income. That what is I'm trying to convey you regarding this, because if we know the basic understanding, then when we file the return, then we know how the calculation will be worked. Okay. Any query, concern related to whatever we discussed till now, you can put in the chat box. So it will be easy for me as well to discuss each and everything. Okay. So third thing, the profit and gains of business and profession head. Profit and gain of business and profession head, whatever income you earn from, if you are doing any kind of business and profession, and whether it is professional or whether it is a business, and profit from running a shop, or if you are a doctor or a chartered accountant, you are doing any practice for there's a particular professional list over there. So if you are following the same, it will be covered in the PGBP head, profit and gain of business and profession head. And there is a separate calculation for the profit and gain of business and profession head. And in Income Tax Act itself, they describe at what type of expenses is allowed, what type of expenses is disallowed. These things specifically cover in a PGBP head. Next thing, a capital gain act. So nowadays, everyone investing in a share market. So we all know that whatever the profit and loss from the transaction on share market, which is if you are dealing as a investor perspective. So if you are an investor, either long-term investor or short-term investor, your whatever income you earn from them will be going under capital gain head. Apart from that, if you own any kind of capital asset like land, building, house, whatever the thing, if you have capital asset you have, when you sold the same, so any kind of profit arise from the same, so the provision of capital gain had will be levy. Capital asset includes shares, gold, jewelry, all things is considered as a capital asset. Okay. Next thing is the income from other sources. Any income which is not fall in about four discuss heads of income will be going under this income from other sources. And the like basic example is interest on saving, fixed deposit, gifts, winnings, income interest from FD on bank saving. this interest, FD, dividends, like if you have any kind of capital good, if any capital asset, so when you sold that capital asset, then in profit of that part will be going under capital gain. But whatever the recurring income you earn from that capital asset will be going in other sources. Suppose you own any shares of any particular company, so when you sold that shares will be going under capital gain head. But whatever the dividend you receive, that is going under income from other sources, and the provision of income from other sources will be levy. And I hope you understand these basic things. For the 4 5 different heads, any kind of query concern related to the same, please put in the chat box. Otherwise we will move forward for the different thing, because we have discussed today lots of things. Okay, so next thing is the share market income. And the share market income can be taxable under different heads of income. It's depend upon the nature of transaction. If shares are held as a investments, so profit and loss on shares will be going under capital gain head, and dividend will be going under income from other sources, which we already discussed, as we that this is the shareholding purpose. And other than shareholding ups, if someone is in a intraday transaction, if someone is dealing in an intraday transaction, then intraday transaction will be considered as a speculative business, that also going under income, that is also going under PGBP head. And but this is a speculative business which is other from regular business, so the tax treatment will be different. There's a separate provision for speculative business, separate rule for speculative business, so they have to be follow that rule only. They are not going, they have a separate rule for the adjustment of losses for the speculative business, so that is considered as a separate part. And other than that, someone is dealing in a F&O transaction. F&O transaction basically is a normal, considered as a normal business, or F&O is a normal business category, and we all know that maximum person incur losses on F&O. So but that is a normal loss. So if you have any kind of losses in a F&O, and also there is a big change related to F&O also. Now when you file return, because not this time I don't have possibility to show ITR 3, because ITR 3 is right now not live on our portal, so we are not I'm not showing in portal how it look like, but it is big change related to F&O. Now when you file your return, if you have any kind of intraday transaction, you are definitely going for ITR 3. And in ITR 3 there is a separate column in a business profession head related to the whatever the profit turnover value of that turnover, or the net proceed from that IT, that particular related to F&O will be separately, you have to be mentioned in your return. Earlier what happened, you can merge with your or normal business in return, because there is a no specific column for the F&O transaction. But now there is a specific separate column in ITR 3 in a business and profession schedule, BP schedule, business and profession schedule. There is a separate column. Right now ITR 3 is not live, so not possible for me to show you the same, but this is the new changes related to the same. So I hope you get this point, how the transaction and treatment will be for the intraday transaction, F&O transaction, because maximum time the pupil has query related to the same. So if you have similar query or any other query, so please put in the chat box. I hope you get understanding what we are going to do the same. I hope you get understanding what we are going to discuss. Any query, any concern, please put in the chat box. Next thing is exempt income. Whatever exempt income refers to the income that is not taxable under the Income Tax Act will be shown under income exempt income column. Schedule exempt income in income tax return. When you file the return, there is a separate schedule for the exempt income. You have to be definitely fill that form, fill that schedule particularly. So what is the exempt income? Like agriculture income is an exempt income, and the ITR 1 and ITR 4 specifically, if you have only up to 5,000 rupees of exempt income or agriculture income, you can opt for ITR 1 and ITR 4. Otherwise, you have to be definitely move for ITR 2 and ITR 3. So this is the way exempt income, whatever the exempt income you have some income is a partially exempt, some income is a fully exempt. Like if you are a salaried person and if you receive the any kind of HRA allowances, and if you opt for a old tax regime, then partially HRA is a partially exempted. So when you filing your return in ITR 1 for the salaried person perspective, you have to be definitely fill the exempt income column. There is a very few item which cover in a ITR 1. So there is a separate column where you have to be fill the information related to the exempt income specifically applicable to that particular salaried employee, that is HRA allowance. So HRA allowance you have to be write it over there. So this is also the keep, you have to be carefully when you file the return, then you have to be definitely fill the same. Okay. Next thing, a TDS. What is TDS? TDS is a method of collecting income tax in India where the person make any kind of payments, then the partial payment will be collected on behalf of the source, the person who is actually earn that income. They have to be pay some tax advance, but the paid by the tax is not by the person himself. The tax will be paid by the another party which incur actually the expenses. Okay, so let's understand with some basic examples, so you will get the more clarity on it. So if you receive 50. So what happened here? If Mr. A receives 50,000 per month as a rent, the tenant is required to 10% deduct. For 10% TDS, they have to be deduct. 5,000 TDS will be deduct, and 45,000 rupees he received only in hand. So whatever the 5,000 deduct by the tenant will be deposited to the government. And whenever the Mr. A filed their return, they will use that amount as a tax already deposited by someone else on behalf of the Mr. A. So this is the way the mechanism of TDS will be worked. Payment paid by someone else, the liability of someone else. So tax paid by someone else behalf. This is the way TDS system will be worked, and whatever the TDS deducted by the payer will be deposited within a prescribed time in a law. So this is the way mechanism of TDS work. I hope you get understanding. And when the person, the Mr. A, finally paid the tax of that particular year, here we are talked about 25-26. So when the Mr. A 25 pay the tax for the 25-26, what are their actual tax liability after adjusting all the adjustments and of all the additions, whatever the tax liability, first adjusted the amount from TDS, and the remaining portion will be accordingly calculated. So I hope you get clarity on the TDS part. Any query, any concern related to TDS, please put in the chat box. Okay. Next is the advanced tax. So this is also, TDS is also the advanced tax, the mechanism of advanced tax only. But what happened? The difference is the TDS and advanced tax is the TDS is paid by someone else for someone else behalf. So TDS is similarly work as an advanced tax only, but there is a different mechanism for TDS, because TDS is just for the cross check by the government based on the TDS, government control on expenses and income both as well. This is the way the mechanism will work. The person, the payer will not show more expenses without deducting any amount, because if they are not deduct TDS, then they are not eligible to claim their expenses. As we all know, as per income tax provision, there are some restriction on it. And also if they deduct TDS, then this will be all transparency will be there related to that particular expenses. They cannot claim higher amount of expenses unless they deduct TDS. They don't know about the exact amount. They don't know, they don't able to deduct that. If they deduct TDS, then the transparency will be over there. They cannot be shown extra expenses. And similarly, the person who incur expenses, they have to be directly paid. The tax will be paid by automatically by someone else. So this is the mechanism work for the TDS. But the advance tax is the person who has liability to pay tax at the end of the year, because generally the tax payment after the completion of the year and at the time of return filing. So generally the person will pay tax at the time of return filing, which is very delayed for the government. So government wants some revenue will be they collected by quarterly basis. They will collect on the periodically basis. They will collect some tax, because you know what, we first understand what is the logic of collection of tax, because government want to for the run our country, for the development of infrastructure, they need money. So they collect money from the taxes only. So they get money periodically basis. So that's why there is system of advance tax, that advance tax will be paid by quarterly basis. So they have to be paid advance tax in a quarterly basis, 15%, 45%, 75%, and 100%. We are talked about for the 26 advance tax payment for the 26-27. But here we are discussing about 25-26. So similar thing is the rates are one and the same in both the years. Okay, so this is the way, this is the four due date: 15 June, 15 September, 15 December, and 15 March. This is the way, whatever the tax liability they have. So the liability of advance tax only arise if person well when considering their total amount deducted by the TDS already deducted, because you know seller in case of salaried person, maximum TDS will be already deducted by the employer only, because the TDS rate will be in employer employee cases average rate of tax. There is a no fixed rate for the employer perspective. They have to be deduct TDS average based on the average rate of tax. So because generally in employer employee case, there is a no requirement of any kind of advance tax, because all the tax will be deducted already by in a TDS form. So even the generally in employee no need to deduct TDS. But if they have a other sources income, if they have a huge interest income or any other income like a rental income, if they have a huge any other income and their tax liability after deducting the TDS is more than 10,000, then they have to be deduct TDS on quarterly basis. This is the 4-day due dates. I hope you get in the screen, and they have to be definitely comply the same. And if they do not comply, then at the time of return filing, the calculation will be automatically calculation will be happen in considering these day, and there is a additional tax liability will be added at the time of return filing. So this is the way system will be work. I hope you get clarified on advanced tax part as well. Next thing is self-assessment tax. I hope you get understanding of TDS part. I hope you get the clarity on advanced aspect. Next thing is come when you actually file your return after adjusting everything. What are the tax liabilities? Suppose suppose your total tax liability for the year is a 50,000. You already deducted the TDS 35,000 and advance tax paid by 10,000. I hope you get clarity how TDS will be happen, how advanced tax will be happen. After considering the same, the net tax liability you have a 5,000. So now when you file your return, you can deposit that amount considering the self assessment tax, and deposit that amount and the file your return. So at the time of filing return, after adjustment all deductions, TDS and advanced tax, what are the tax liability you have? So you have to be deposit that amount at the time of return filing will be considered as a self-assessment tax. I hope you clarified the same as well. Next thing is a old tax regime versus new tax regime. So old tax regime and new tax regime, it's a very in earlier up to 24-25 we have a lots of thing to check it out. But now when we are going to the discussing about old tax regime and new tax regime, this is a very important thing we have to be see, that now the maximum pupil has a benefit of a new tax regime only, because the especially for the resident individual when we talked about, because they have got a higher rebate. They have got rebate for the 12 lakh rupees. If the person is a resident individual, then up to 12 lakh rupees their tax liability is a zero. There is a few exception is over there, but still they have a this much thing, especially for the when you are filing return for perspective of resident individual, then the 12 lakh factor is a very important factor. Apart from that, the rates is also liquidative for the same. Rate is liquidated for other than resident individual as well, but especially for the resident individual, the 12 lakh rebate is a very good number, and that's why the maximum people will be opt for a new tax regime. Okay, but if the person is opt out of new tax regime and opt in for the old tax regime, when they choose old tax regime, then they will get additional benefit of HRA, LTA, LIC, PPF, and deduct ATD deduction. And there's a huge benefit in home loan interest also. And the calculation will be also very different in both the regime. Even the set off and set off of losses is also different. When we are talked about income from house property, we will discuss in the letter, that's why we are not covering here. So basically, what is the old tax regime and what is the new tax regime? Old tax regime is they will get extra deductions and exemptions, but in new tax regime the rate will be comparatively lower, but they did not get any deduction exemption like ATC deduction, ATD deduction, HRA, LTA, LIC, PPF. They have to be forego each and every deduction and exemptions we give. They will get very few deduction and exemption, which is actually not such relevant. So that's why, for if the person has a huge this thing like extra deduction and exemption, they will definitely move for the old tax regime. And if they don't have these deductions much, then they will definitely move for a new tax regime. And especially when we are talked about resident individual, they have a specific benefit for the rebate under section 87A, which is very huge. So this is the way the planning will be worked, and this is the way the things will be worked. From financial year 23-24, this new regime is considered as a default tax regime. So this is the way they have to be. And especially if we talk about a salaried person, they have a option to whether they have a option for a an infinity time. They like they, if they want whatever the beneficial for for the salaried person, they will opt for a, if they opt for 23-24 old tax regime, and now they want new tax regime in the later year, if they want for the old tax regime, they have an option for unlimited time. So they don't worry about the same if they are a salaried person, if the person is a salaried person. Other than salaried person, it's a very restrictive rule. Once they are more, they have a lifetime, once one time they have an option for switching the same, and later on, if they don't have option to come back to the new tax regime. So this is the way entire mechanism will be worked. So I hope you get clarity on the same. Any query, any concern related to any matter, please put in the chat box. So the things will be like comparatively we will discuss, then we will get more clarity and we will get new things in our mind. Okay. Next thing is the old tax regime tax slab for the financial year 26-27. So when this is the, especially this chart we will create for the perspective of 26 for the I think there's some mistake. We are talk about for financial year 25-26. So this is chart for a 25-26. So I think there's some mistakes. So here, when we show in the screen individual perspective, this is the rate for the old tax regime, and up to 2,50,000 nil, from 2,50,000 to 5 lakh 5%, 5 to 10 20%, above 10 30%. This is old tax regime rates. And for super senior citizen and senior citizen, separate rule, and the rebate will be 12,500 only in case of new tax old tax regime. And they will get when we consider 12,500, the up to 5 lakh rupees of their income will be considered as a zero in old tax regime. And this is the way the things will be worked for a old tax regime. And for the new tax regime, this is the slab rate for a new tax regime up to 4 lakh rupees nil, 4 to 8 lakh 5%, 8 to 12 lakh 10%. And this is the way the system for a new tax regime. They will get 75,000 as a addition. They will get additional 75,000 rupees of additional. They will get 75,000 rupees of extra deduction, standard deduction for salaried employee, in especially in particular new tax regime. And they will also get a rebate under section 87A for 60,000. So overall, 12 lakh, up to 12 lakh rupees, they don't have to be pay for the salaried employee, and additionally 75,000. In short, for the salaried individual, they will get up zero tax up to 12 lakh 75,000. So I hope you get clarity for the salaried individual and other than salaried individual. What are the rates? There's a different rate for the salaried individual, and for the slab rate is for the salaried individual up to 12 lakh 75,000 zero tax, and for the other than salaried person like businessman and other perspective up to 12 lakh rupees zero rate will be levy on a new tax regime, especially for the resident individual. Okay. There's a specific concept of marginal relief in case of new tax regime. So in new tax regime, if your income will be slightly on a upper side, then you will get special benefit. I'll give you one example, so you will get clarity on the same. So here you will see the total income is a 12,000, 25,000. The person is a other than this salaried person. Okay. So his tax liability after considering all this is a 63,750. I hope you get clarity, able to see in the screen 63,750, and they will final tax payable is a the final the 63,750 is a tax liability, and the final tax payable is a 26,000 only because they will get marginal relief of 20 because the additional value is a 25,000. So they will get the relief of 25,000 of this 63,750. So their their tax liability will be they will get additional this marginal relief benefit for considering this, because how much amount of tax liability they will be exceeded, that will be will be the value of increase by 25,000, and the tax liability increase is a 33,8,750. So they will get the relief of 38,750. So tax liability is a 25,000. So here you can see the marginal relief will be calculated like their income is a 12 lakh rupees. Now the income will be increased to 12 by 25,000 only. So 25,000, and how much amount of additional tax they will pay. So the actual tax minus 25,000 will be considered as a marginal relief. So this is the way they will get the marginal relief, the additional benefit if the slightly income will be increased. So I hope you get clarity on the same. What is income tax return? Income tax return is a form that individual and a businessman file for the income tax department to declare their income and claim deductions, report tax paid during the year. So if they do not file their return, they're not able to get rebates. They do not able to show how much tax liability they have, and they have to be responsible to pay taxes. So for the payment of the tax, for the transparency perspective, for the getting deduction perspective, and also when they applying for the multiple things like applying loan, then they have the bank will be asked for the income tax return. So the income tax return they have to be filed because of the showing their what are the tax liability they have to be as per income tax act perspective. So they have to be submit for payment of the taxes, they have to be mandatorily file their tax return. So this is the way the tax return liability for the same. Mandatory income tax return filing. If total, when the income tax return filing is mandatory for not we all know that for everyone is not mandatory to file their return. If total income is above basic exemption limit for the old tax regime, 2 lakh 50 for the normal person, 3 lakh for the senior citizen, and 5 lakh for super senior citizen regime. So this is the basic criteria. So if the income is more than basic exemption limit in old tax regime and new tax regime 4 lakh rupees, then they have to be file the return definitely. Even if the person is a resident individual and they will get additional rebate for the same, then also the return they have to be liability to file their return. And deposited exceeding, so this is the first basic criteria. Other than that, the same, if if deposit exceed 1 crore in current account during the financial year, they have to be definitely file their return. Even their income is a below exemption limit, their income is a below exemption limit, but the deposit of exceeding 1 crore in current account and deposit 50 lakh in one or more saving account, if any kind of for any reason, they have to be, suppose the person has sale any land and any land, and they will get money and in their bank account. Probably they have a loss on that land. I'm just assuming. Then this is a hypothetical example. So suppose maybe they have the person has a loss and their income is below basic exemption limit. Still, if the deposit amount is more than this 50 lakh rupees in a one or more saving account in a financial year, or 1 crore in a current financial year, or electricity bill paid exceeding 1 lakh in a financial year, this is the criteria decided by government. If these things will be happen, if the electricity bill is more than 1 lakh rupees, and spending more than 2 lakh in a foreign travel, and business sales more than 60 lakh, professional receipt more than 10 lakh, even person has a losses, then also they have to be after deducted, because this is the sale value and their gross receipt, the expenses will be different. So after considering the expenses, maybe the person has a loss, still they have to be definitely file the return. Because of this, this is the basic criteria mentioned in a income tax act. So because of these reasons, they have them sometime income tax return will be mandatory. So why we will discussing the income tax return mandatory? If the person has a liability to mandatorily file the return, and if they are not doing the same, they have to be huge consequences. What are the consequences? We will discuss the same as well in this class only, that they have to be pay additional interest, liability, these things they have to be paid. That's why the return filing is important. Okay, so this is the basic criteria. More than this amount, so they have to file their return. Resident invested in foreign, received any kind of foreign income, TDS and TCS deducted 25,000 and 50,000 for the senior citizens. So if TDS and TCS deducted 25,000, even the person has a loss, but that this amount of TDS will be deducted. Because this is the basic criteria. We have to know that if the person has a TDS deducted and they have a not a enough income and they don't want to file return, but for the reason of for claiming the claiming rebate, then also the person has filed a return. But sometimes the sometimes many of the person don't have idea about the same. Many of the salaried person, they don't know that return filing is mandatory. If not, if they do not file their return, they will lost their refund. But this is also the important thing we have to understand, that if this much amount of TDS and TCS deducted, the return filing will be mandatory. Because if we miss the same, then there is a penalty on it. What kind of penalty, we will discuss the same as well. Okay. And for TDS and TCS refund, there is a filing for the carry forward of the losses. So if you have any kind of losses, and if you want to same to carry forward, then also if you file the return, then it is possible to carry forward the same. Otherwise, you have to be lapse that losses. Okay. Lottery winning, and any if you are earning any kind of win the lottery, dream 11, any kind of this type of thing, if you do the same, then definitely you have to file the return. Cryptocurrency, if you are dealing in a cryptocurrency, then also you have to be mandatory file the return, even if you have you have a losses. So these are the basic thing which we give, which will compulsory mention in a income tax rules. So they have to be mandatory file their return. Okay. For companies and firms, even with zero income, ITR filing is always mandatory. So these are the things which we have to be see. Set off of losses. Set off means adjusting losses against income in the same financial year. You can reduce your tax liability by setting off losses under one head of income against profit under another head. So what are the set off of losses for the different head of income? We can see here. Intra-head set off, loss from one source is set off against income from another sources from the same head. So suppose you have a loss from one house property and set off on another house property, you can set off the same as per the set off losses provision. And so this is allowed in a house property head. Okay. Interhead set off, loss from one head of income is set off against income from income from another head. House property loss can be set off against salary or business income up to 2 lakh only, but this is allowed only in case of a old tax regime. So if you opt for a old tax regime, then only you can adjust your losses from any kind for house property losses, you can set off from any other income. If you opt for a new tax regime, this is not allowed. So this is no interhead set off allowed in a new tax regime. So intrahead set off allowed. There is a few exception, especially in case of a cryptocurrency transaction. If you are dealing in a cryptocurrency, then you are not allowed to set off whatever the loss you have, every script you have to be forgo the loss, and whatever the profit you have to be paid straight for a tax. Lottery, if you receive any kind of lottery money, so you are not settle that amount from anything, because that amount is considered at a specified pay taxation system, and there is a set of provision will be differently governed. So whatever we are here discussing related to the set of, especially for the no, the income which is considered as a normal taxation system, the slab wise system, or we can say the basic taxation system, there are specific certain time of type of income which will be which is exclusively governed in a specified taxation rate. So that is not covered in provision of this set of losses. I hope you get clarity. Suppose we are talked about capital gain head. So the capital gain head, the system will be different for the same. And for we are talk about if we talk about lottery or cryptocurrency, these are the income which will be governed in a specified taxation system. So here the provision will be slightly differ. Okay. So here we will discuss about the normal taxation system rule, where the normal taxation system rule applies, like for the companies, for the individual perspective slab wise rate. For other than that, for the company's perspective, there is a rates of 25%, 22% and 15% for the different type of organization based on the choosing of the new tax regime versus old tax regime. So they are the normal, but some expenses, some incomes are specifically governed in a specified provision. So the rate will be different over there, and there is a separate provision for the same as well. So here, whatever we talk about, like house property income, that will cover in a normal taxation rule. So whatever the normal tax applicable on that particular type of person, the rate will be applicable accordingly. Okay. So here the person has a set of the same from another house property in a within head, but interhead we can when we can go for the interhead. So for the house property, interhead settlement allowed in a old tax regime, but not in a new tax regime. If I have a business income and loss under capital gain, can we set off the loss of? So let's see, there's a two query. We will discuss the same. Okay. So if I have a business income and loss under capital head, and then can we set off the loss of capital gain against business income? No. I'm telling you this much only because business income will be considered as a normal taxation rate. Okay. But the capital gain had short-term capital gain had income and long-term capital gain had income as a separate rules, which we will discuss in a later slide. We will discuss the same. So there is a separate rule for the short term capital gain and long term capital gain. So we are not settled with the business income because there is a specific rule. There is a specific there is a special rate for the long term capital gain and short term capital gain. Okay. I hope your query will be resolved, Mr. Mahendra ji. And the next query we have a, if the shares of company are with EIEPF and the dividend is also transferred to EIPEF but is appearing in AIS under STF for financial year 25, it is considered as a shareholder income for that year for tax purpose. Also, is the company required to send a mail regarding details or intimation of the dividend? So, per share or company are with the EIPF. I don't understand what is EIPF, and the dividend is also transferred to EIPF. What is the EIPF? Is it a mutual fund? Can you confirm, Mino ji? What is EIPF? The full form of EIPF? Even if, but I'm just saying you, whatever type of even if the maybe EIPF is a mutual fund. So whatever. Okay, okay, sorry. So it is an investor education protection fund. So the thing is, whatever type of fund you have invested and you will get the dividend income, it will be directly, because you know what, there's a some income which is exempted fully. Like if we are talked about provident fund income. So if provident fund interest is also exempted, everything will be exempted. Then we are not the provident fund right now we in our hand, but that fund in the EPF CFO. So if the provident fund is taxable, interest is taxable as per the income tax act provisions, then we are definitely, even if we don't have that fund, then we also if that is not exempted as per provisions, then we have to be mentioned in a income from other sources. Similarly, the dividend income is not exempted as per the law. Earlier it was exempted, but now dividend income is exempted in shareholders hand. So even that is in a hand of investor education protection fund. The dividend will be, if the dividend is belongs to you, then definitely you have to be show in your return in income from other sources. This is part of your income only, so this is the dividend will be considered as a your income only. So if I have a loss under long-term capital gain and gain under short-term, can we say no? That is not possible. So short-term capital gain has a rate of 20%, and you are, what I'm trying to say, there's a different rate of taxation system in a capital gain long-term capital gain rate is at 12.5% and short-term capital gain rate is a 20%. So you cannot set off the same. I hope you get clarified, Mahendraji. And whatever fund you have in that particular fund, if that belongs to you, so whatever dividend, if it is a taxable, it will definitely part of your income only, and you have to be mentioned in income from other sources. So I hope your query is also resolved. And if you think so, the investor education. So I don't understand why your this is, you invested the same or any other reason the amount is in an investor education protection fund. Can you please highlight the same? Why your fund is in an investor education protection fund? Because there is a generally the fund the shares over there is a, there's some specific reason. If any, can you please highlight the same so we will get clarity on that part also? Okay. Why your fund is in an investor education protection fund? Yes, Meenu ji. Meenu ji, can you please tell me what are you will please write on the chat box so we will discuss the same. Okay. Next, we have to be, so this set of the rule related to the same. I hope you get clarified the same. And now, so this is the set of clauses related to the which is allowed. We will discuss the same, and whatever the any other query concern related to the same, you can put in the chat box. So we will discuss the same for the investor education protection fund. Please, Meenoji, please, you can do one thing. You can please write on the chat box whatever the concern you have. No, even income from long term, because the rate is a long term capital gain is a 12.5%, and in up to 1.25 lakh, it is totally exempted. Up to 1.25 lakh rupees exempted in long term capital gain. I hope you know that. After that, you have to be paid 12.5% tax. Okay. Is the doesn't take, so I pay, what is, can I unmuted work as a custodian? Can I? Okay, so if possible, please highlight the same in here, or if any specific query you have, I hope you have a Batuk's WhatsApp number. So please, you can do one thing. You can put your query in on that WhatsApp number, Batuk's WhatsApp number. So we will discuss with sir and will definitely help you out. Okay. Because I don't understand, if I don't understand the background theory, because right now we have a lot short of time and we have to discuss uh, more things. So that's why I'm telling you that whatever the query you have, you can put in the, you will write in what's in a Batuk's WhatsApp number. So I will discuss with the Sachin sir, and they will provide me the same, and we will discuss over there. I will just I will just text you regarding the whatever the your concern and query related to same. Okay. And if required, I'll share my personal number. So we will discuss on that. If you want, you can ask to search to the Buttocks WhatsApp number. We'll share my personal number, so we will connect on WhatsApp. Okay. If laws can't be fully adjusted in the same year, you can carry forward the same. When is ITR filing not mandatory for senior citizen? So this is specifically related to the senior citizen. The person must be resident individual, ages 75 years or more, and must have only pension income and interest income from the same bank where pension is received. The this is the specific criteria which is specially for the senior citizen. If they have a only pension income and interest income from the same bank which they have a pension received, so the specific criteria for for that particular senior citizen, if this thing will be happen, then the senior citizen must submit a declaration under form 125 to the bank, and they don't have to be required file their return. This is also very big beneficial for the senior citizen, because I know the particularly some senior citizen, they have this much income only, but earlier they have to be pay huge late fee and penalty because they don't know about the same, that their criteria for return filing. So this is for the benefit of that share for that particularly perspective. So it's a very important, and this is the way the things will be work. Due date of ITR filing. This is the due date of ITR filing for the perspective of this financial year for salaried individual and HUF pensioner, which they have to be going with the ITR 1 and ITR 2. I hope you know that how to choose correct ITR form. Because the choosing right ITR form is a very important. If you choose wrong ITR form, then I hope you will get the WhatsApp number of Batuk on Batuk's website. So when you are going to the Batuk's website, you will get the WhatsApp number over there. When you are you will get the WhatsApp number on website also. When you visited the Batuk's website, you will get WhatsApp number. Even if you Batuk consultancy Jodhpur, if you find out on you will get contact number easily on a web. Fine, fine. Okay. So these are the due date you can see for the person who is opting ITR 1 and ITR 2. I hope you know that how to choose correct ITR form. If you choose wrong ITR form, then your return will be considered as a invalid in a straight. So if your return will be considered as invalid, if your liability to file ITR 2, or you are choosing ITR 1 and file their return. So there's a possibility you will get that your return filing is invalid, and it is considered as you never file your return. So this is very important that you have to be choose right ITR form. So what are the criteria for the selection of right ITR form? We will discuss the same. So this is the due dates we can see in the screen. 31st July for the ITR 1 and ITR 2. Business and profession, ITR 3 and ITR 4. Business profession, we are talked about individual HUF and the AOPs. Sorry, individual HUF, we are especially individual and HUF, they have to be come with this ITR 3 and ITR 4, and ITR 5 for the AOPs, ITR 6 for the companies, and ITR 7 for the NGOs. Okay. So this is the ITR 3 and ITR 4. When the person is choose ITR 3 and ITR 4, the due date is 31st August 2026. Tax audit cases, ITR filing due date is the 31st October 2026. Transfer pricing cases, due date is the 30th November 2026. And B-related return, ITR filing due date is the 31st December. And there's also big change in the revised return filing. The due date is 31st March 2027. This is a new change which has come from a budget 2027, which is applicable from 25-26 only. If I file after 2026, then how much late fee that is for abbreviated and revised return. So you can see on the screen, even we will discuss in a later slide as well, what are the 1,000 rupees and 5,000 rupees will be liability over there. If there is a zero tax, then 1,000 rupees, and otherwise 5,000 rupees will be late fee you have to be pay. In revised return as well, you can file your return up to 31st March 2027, but after 26th December 2026, you have to pay late fee. I hope your query will be resolved. This is covered in this slide as well. Okay. So this is the late file. I hope you will get see on the screen. This is the late file up So here this is covering as a old tax regime perspective. So here you can see up to rupees 5 lakh rupees your total income. So late fee filing is 1,000 rupees, and above 5 lakh rupees if your total income, not the tax liability. Here the things is generally for 5 lakh in opt for a old tax regime, because this is the rate will be considered from old tax regime and only. And this late filing fee is in over the years. So maybe that's why this is mentioning look like this, because uh, what happen if you are not able to get the rebate also if you are not filing the return on time. So this is the way they have to be mentioned that up to 5 lakh, because it means your zero tax liability. So you have to be get a rebate for 1 lakh rupees. And if you're, and I think this is for the old tax regime. If the person is a new if the person is going under new tax regime, and definitely if the person is actually not filing the return on time and they file related return, they have to be mandatory go for the default tax regimes, and they get, I think they will get the 12 lakh. Maybe I think I have to be confirmed for the same. But the generally it will be if tax liability is zero, then 1,000 rupees, and if there's a tax liability, then 5,000 rupees late filing fee. Okay. Updated filing return. You can file an updated return up to 4 years from the end of relevant assessment year. So for the tax year 25-26, the deadline is 31st March 2020 2013. This is also the big change is related to the updated return as well. So now the person if miss anything from their return, and they want to file their updated return later on. An updated return can be filed even if original B-related or revised return was already filed. Only one updated return can be filed for a tax year. If person miss original return, then he has to pay late fee first for belated return, again late fee for revised return. If he has a if he wants to make correction, is it correct? No. So first thing you have to be understand that if person never filed the return, so they don't forget. So they have option. They have a up to 31st December. They up to 31st December they have to be option for the, if they never filed, they definitely go for the belated return. So late fee will be definitely for the same. And if they want to again revise the same, then the thing will be the for after December, obviously, if they are up to December, if they be lated and revise the same, then there is a no late fee. But the person is after the same after 31st December, the late fee will be levy on a revised return. So this is the mechanism, practical, and the practically things will be this is the way work. So if the person is up to December, if the person is never filed the return, so definitely they have to be paid late fee, and then they able to file the same. I hope you will clarify it. Okay. And this is updated return. Special rate of income. This is the special rate of income refers to certain type of income that are taxed at a fixed rate separately from the normal rate. So short-term capital gain on listed equity share mutual fund 20%, long-term capital gain on a listed equity share in mutual fund 12.5% after 1.25 lakh exemption. Lottery crossword game show 30%, horse race winning 30%, crypto 30%, and unexplained income 60%. So this is the way the things will be worked. Here you can see in the screen, there's a 7 ITR form. When applicable, which type of income will be covered, exempt income cover, lottery income cover, which this is the special chart will created that you will get clarity on the single frame that what type of ITR form you have to be choose correctly. So when you are going through this chart, that ITR 1 applicable only if your total income is up to 50 lakh only. So ITR 1 and ITR 2 is a similar criteria. Only difference in ITR 1 and ITR 4 is this much thing is like ITR 1 is for non-seller non business person, and the person has a business person and they have opt for a presumptive business income scheme, then business income presumptive business scheme. So if they opt for a business if they opt for a business presumptive business income, then they choose for ITR 4. So this is the difference in ITR 1 and ITR 4. Rest of the criteria, 50 lakh income, 50 lakh income is the same. And they have a salary income, two house property. This is also change in ITR 4 as well, two house property. Now it is allowed, maybe miss, but ITR 4 also two house property will be allowed. And agriculture income less than 5,000 allowed. Long-term capital gain also up to 1.25 lakh allowed. The same criteria in the both. I think this is some mistakes in this. So maybe this is also allowed long-term capital gain. So if you are going through the forms, then you will get clarified on the same as well. So this is the way the chart will be created. You will get these things correctly. 10E applicable in case of arrear of salary if the person has a get arrear of salary which is related to any other year for the salaried person. So because of the same, because maybe there's a possibility that earlier year the tax liability will be comparatively lower, but now maybe they got appreciation and their tax will be in a higher slab. So now if they consider the same in a current year, what are the tax liability? And if that is not considered to that particular year, the difference will be considered as a rebate. And to getting that particular relief or rebate, they have to be filed some separate form. And what are the form number? The new form number is as per old tax, as per the new income tax rule, and form 10E for the earlier income tax rules. So this is the way the things will be related to the arrear of salary. I hope you get clarity on the same. What is the new arrear of salary? And if you want to opt out for the default tax regime, that is new tax regime, then you have to be definitely fill the one additional form 10IEA, and especially for individual HUF. And when you are once getting the same from a opt out of the same, then until so you have to one more time you will get the again for the new tax regime. After that, your window will be closed for forever. But now once you back for the same, then you are not. If you once again you are want to move out from the old tax regime, then you again file the same. But if you are doing the same, if you follow the same regime in a subsequent year as well, so no need to file the again this particular form. You have to be just mention that acknowledgement number on your return filing. So this is the way the things will be worked. And the assessment system. So this is the way the entire things we will be work, and whatever we discuss today till now in theoretically. And also we are we are launching one book, and also we will conducting a session on the same. In last weekend we have a session on a practical part where we will cover entire schedules in a practical way. So if you want to get that book, which is available in our website and also shared by the team Batuk in our chat box. So if you want to purchase the same, it is available in a, the link of the same is given over here. So in this ebook particularly, we will covering entirely all the schedules in all ITR for in ITR 1 to ITR 7, and all technicalities you will get in a one roof. And this is just 249. This is available on our website, so you can check it out from there. And also if you want to the recording of the session, or then you will also get from the same. If you want the recording of the 8-hour session of complete practical understanding of all income tax return schedules, so this is also available over there. And the book, if you want to purchase the same, the link of the book will be in a description box or in a chat box. So if you wish to buy the same, then you will check it out. Okay. And this is assessment refer to the process of determining the correct income tax liability, verifying the return filed by the taxpayer under the Income Tax Act 2025. It is conducted by Income Tax Department to ensure that the income declared and paid by assessee is accurate and in compliance with the law. So this is the way assessment will be happen. Self-assessment tax will be happen. This is a different tax rate in a new income tax as well as old income tax act. What are the rate? Old income tax act 1961 versus new income tax act 2025. So what are the rate as per where self-assessment tax happen in a section 140A. Now the section is a 260A. So first you have to file your return, self-assess your return. And then you will get the intimation that the intimation is just for your information. So they will give you the intimation that we will get this info. If they want some correction, so they also intimate the same. As sometime intimation just for the intimate you that this information I will get through the return filing perspective. And then if any query or concern in an intimation, then you have to be respond within a time prescribed. Generally the timeline is a 15 days or 30 days. It is mentioned in an email. You will get the email. And other than that, you will get the nudge initiatives, the risk based, and the risk you will get because of the discrepancy and the discrepancy return filing in as per the AIS. So this is very important thing you have to understand, that when you file your return, please be careful about the AIS. Please carefully check the each and every line item of AIS, and the submit feedback option in AIS is also very important. So you have to be carefully check the same. If any item which is, if you miss the same, then definitely you will get the notice or the risk, the generally you will get the risk on your some, there is some high risk transaction in your in your particular thing, that you will get the notice for the same. So you have to be carefully see and verify from the document you have, and if you think that is not related to you, so there is an option of feedback on the AIS. So go to that option and select the relative or option which is applicable in your case, and select the same. So this is the thing which we are covering in a practically is in our course as well. And once you go, if you want to buy the book which is available in our portal, in our Batuk's website, so you can check it out over there and buying the same. So this is the way the assessment will be done. And first you will get the intimation, and if any kind of scrutiny happen, then they will send notice in 143.3, and then the sections will be changed in now. Best judgment assessment happen in a 144, and reassessment happen in 147. So this is the way the things will be worked for the return filing perspective. And this is the way the things will be concluded. I hope you get some interesting information from our side. And I think there's a time permit. We have already 10-minute delayed. Any specific query, concern, or related to the same, please put in the chat box, because there's a limitation of time. So we have to be conclude the same, and we will meet again soon. So we will discuss few more things. But if you wish to buy the practical book where we cover entire all the schedules, please purchase it. It's available on a very in a very economic rate. So if you wish to buy the same, please do the same. Okay. I hope you enjoy the session. Any specific query, concern related to STEM, whatever we discussed till now, please put in the. Okay, I have one query. Please explain again 50 lakh income limit for the ITF4. So basically, 50 lakh, so if you have a total income considering all the head of income, I am not talk about the receipts or anything, I'm talk about the income from uh, yeah, like when you choose ITR4, generally you have a presumptive taxation scheme. So suppose you have after getting the amount, like you have whatever the receipt you have, your total, your income, and I'm not talking about receipt. So suppose your income is presumptive taxation scheme 20 lakh rupees, and if you have a other income as well, interest income, dividend income, or capital gain income, anything. So your total the capital gain income is, but capital gain income also there is a consideration. Capital gain income also not covered in ITR4. If you have a capital gain income other than long term capital gain of 1.25 lakh, you are not able to choose ITR4. So if you have interest, dividend income, and if you have a salaried person as well, and presumptive taxation scheme of for your profession or business perspective, the total income of all the heads below 50 lakh, then only you can choose ITR4. Otherwise, you can move for ITR3. So this is the explanation for your question. 50 lakh considering all the heads of income. So if you're all considering all the heads of income exceeded 50 lakh rupees, then you have to be definitely moved to ITR3. ITR3, ITR4 is not available, not allowed for exceeding 50 lakh income. Okay. I hope you understand the same. Thank you. Thank you so much, sir. Any other query, concern, the same, please put in the chat box. Otherwise, it's time to sign off now. So we will meet again. Next week, we have a session related to the TDS. So we will meet again. So if you wish to join the same, then please join the same also. No, you can go for the presumptive taxation scheme. So if you want to do, when you choose ITR3, there is a separate column for presumptive taxation scheme as well. So you don't worry about the same. If you opt for the presumptive taxation scheme, you can choose ITR3, and then also you have to be file the particular column specifically mentioned over there. Okay. Any other query, concern, or if you want to know more about the particular book, And we have other book related to Income Tax Act 2025 as well. If you wish to check it out the same, then you will please visit on our website, Batuk's website. Then you will get that also. The Memory Technique Book of Income Tax Act 2025. Any other query, concern related to the same, you can you have a WhatsApp number of Batuk WhatsApp number, so you can message over there. So we will definitely help you out. Any other specific demand related to the Income Tax Act 2025, you will just inform over there. So we will arrange the same for your reference, or any other query if you have related to the income tax return, please put in the chat box. So we will help, definitely guide you. I hope you everyone enjoy the session. Now it's time to sign off. Thank you so much for the patience listening. We'll meet again next week. Thank you so much. Okay, I hope everyone is.
Hello. 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 Hello.
Not
Hello.
clearly audible, sorry.
No, audible. Right now?
Your voice is
Hello.
not clear. If you have any specific query, please share on Batuk's WhatsApp number. So we will discuss over there.
Two person.
Or
What is the number?
otherwise, you can put in the chat box.
What is the number? 88 can get number.
Your voice is not clear. I'm not get.
Oh, okay.
Your voice is not clear, sir.
Now